Happy Sunday, everyone. What's going on? How was everyone's weekend? Hope everyone had a good weekend. Today, I know for a lot of you, it's gonna start getting a little bit repetitive. So that's why I asked you guys if you had any questions or any things you guys wanted me to go over. For everyone new, I'm just gonna take some time very quickly just to go over the way we trade our support and resistances for just very very quickly. Anyone new here? Pretty much the way we start off, we have a line at previous close. We make it different than all the rest, so we know it's a previous close. We're gonna put a line at the high, and a line at the low of the day. Okay, that's how my chart is set up usually every day for the most part. The high, the low. You can even do the medium, and then the previous close. Okay. I'm just gonna start going over these questions and start answering them one by one. Okay, guys. So let's get into it. First of all, let me know how everyone's weekend was. Did everyone have a nice weekend? You guys enjoy your winnings or enjoy your losses? Some people. But regardless of how your week was, how the last 2 weeks were, how the last year of your life was, remember it's temporary, right? If you have good self-discipline, you have a good strategy that you stick to, you're going to eventually win, okay? You need to choose one strategy and you have to stick with it. You have to follow your rules. You have to follow your entry. You have to follow your exit. And you have to follow your daily itinerary, okay? What you make in the morning when you're staring at the chart, you say, I want to buy here and I want to sell here, right? As long as you guys stick with that, you're going to be fine. The red days, I don't care how good of a record you've been having in the last 2 months, say 2 years, it will come to a point in time where you're going to be red and you're going to be red consistently. And it's the people who believe in themselves and the people who do not let losses affect them are the people that are going to survive. Okay? It's going to take a lot of self-discipline. It's going to take a lot of fighting with yourself, with your ego. As long as you're staying true to your word, you're going to be fine. As long as you stick to your strategy, you're going to be fine. And as long as you know how to lose, you are not done losing, okay? You're gonna get out of the situation you're in right now, but you are going to go through a time in life where you're going to be losing and you're going to have to resettle. You're going to have to do a full-on reset. A lot of people are like that right now. I've been in a place like that in December where I just went through a couple weeks. I'm like, dude, I don't know what the hell's wrong with me. I don't know how to trade. You need a reset. You all know what you're doing. You all know how to make money, okay? It's the losers. All my inboxes, all my emails are people telling me that they do not know how to stop losing more than they make. And it comes down to the very simplest strategy in the world, okay? You never hold a loser longer than you would hold a winner. You set your line, right? This is your line, 412.31. You buy at 412.31, 25% of your position, right? It goes up 30 cents. You add your second 50%. You can even add right here 50%. And then once you start seeing wicks, so you say you buy here, it rips up here, okay, you add again. You're watching the chart. You see this looking like it's about to run, we wait for the 5-minute candle to close. You see how it closed? There's another wick. Look at that. 1 wick, 2 wick, 3 wick. The next candle starts off, comes up a little higher, ends a big red. So now we have 4 wicks up here. A wick is a resistance or a wick is a support wherever it is, okay? Wicks of support before the run, wicks of resistance before the crash, okay? People always ask, how do I, here, I'll just start reading the questions, but how do you know when to ask or when to add, okay? It's going to take patience. This is why I preach same day or not same days and safe, very safe contracts. And I always tell you, wait for the 5-minute candle to close, because this a candle at one point was a straight green bar all the way up here. It looks super bullish, right? Look how it closed, left a wick. It came up a little bit, ended red. This candle came up, looks super bullish, about to run, but we wait for the 5-minute candle to close. Look at, oh, we got 3 wicks right now. This candle doesn't go higher than that, so this is your reason to hold, and then it just tumbles, okay? So the support and resistances, it's always wicks, right? That's what I am looking for. I'm looking for wicks at a support or resistance line. People want to know how I do my macro or the micro, okay? And I'll go to the day before, and we'll hit one line at the bottom, hit one line at the top, and we'll look, right? So say 413 wasn't there. This is why I keep 413. Active resistance, 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 support, right? And it ran. It came back down, tested it as support, came back up, closed underneath it. This candle came up back up, straight rejection. And look at the sell-off it does. I go on the previous, like 3-4 days. It's okay if you have a bunch of lines, right? Like look at my chart. You want to see my day chart? It's hilarious. I was trying to look at the candle today. Look at that. You see how like crazy that looks and stupid that looks? But once you go down to the 5-minute chart, okay? You go to the 5-minute chart at open. Look it, you only have 4 lines, guys. Or 5 lines. 1, 2, oh, 4 lines. That's it. Right? And wherever direction it goes, we're going to hit my next resistance. We're going to hit my next resistance. We're going to hit our next resistance. And if we open up below, we break through 410.74, my next resistance. Next resistance. Look how choppy this area is. Look how many supports are down here, okay? I keep lines everywhere. And I don't move them, because if we're in one area, I'm not going to have, like, this is pretty stupid, but these are previous closes, okay? I just happen to not delete them. But, like, I will never have lines this close apart. It's stupid. But the area that we're trading in, like, look at here, acted as resistance. This candle acted and then we resisted up top. We broke through this one, rejected the top, then used this one as rejection. So these lines are working for me. Rejection, rejection, support, support, rejection. You see how I'm doing this? And all it is just going throughout the day. You can use a 30-minute, the 4-hour chart. Like, look at my 30-minute. It looks like chaos right now. That's what your chart should look like. Because as soon as you're looking into the time frame that you want to be trading in, like Weeble's, excuse this, like Weeble's just pretty stupid. And it's kind of too much, but as soon as you bring the chart down and you're trading the day, you see how that all that chaos looks like normal now. Now we know where to put. We know where to put. We know where to put. We know where to call. Okay? We know where to call. We know where to call. That's how I do it. I just go on the lines, and the most touch points. You guys are lucky. You don't have to go and do that. Do all of what I did, because I already have all my lines on my screen. I don't hide anything from you guys. I'm not going to make you do any more work that I've already done. You guys are more than willing to take my lines if you would like to. I have them everywhere. And it's just simply going through the support and resistances on the 4-hour, the daily, the 30-minute time frame. Okay? It's not complicated. Do not overcomplicate shit. And the range we're in right now, you guys should have the exact same chart as me. Okay? If you're looking at my 5-minute chart, like all the blue lines, I would take the blue line, so I'll write them down for you quick. Give me 1 second. I cannot stop yawning. Oh, jeez. Okay. Who's in this chat right now? Yo, G Estrada, are you in this chat right now? Can you do me a massive favor? Can you just type down what I say to you? Just quick and just write it down, just like fast. Thank you, appreciate it. Okay, so we'll do 41622, and then it's 416, and then it's 41563, then it's 415, then 41444, then 41349, then 413, then 41231, then just 412, then 41179, then 41074, then 410, then 40968, then 40863. And if you could just post that for me, thanks, buddy. I appreciate it. Awesome. Thank you so much. I'm going to put these on my key levels. Now you guys know the chart, the exact chart I'm looking at, my exact lines. And that's how we're going to start off Monday. Okay, that's the area we're in. Once we reject the lowest point, 408.63, we're going to 400. It's just a matter of time. Okay, so 408.63, we're going to tank eventually. And a day we close under 408 is when you swing puts. Okay, my last line. Okay, Greg, can you just edit that and just add 407.69 for me? Thanks, brother. I appreciate that help. Thank you. I couldn't do everything at once. So yeah, guys, you guys should all have these lines. Add them. Take your time. Add all of these lines to your chart. Now you know what I'm dealing with, okay? Now we know we have the high end at 416.22 and we have the low end at 407.69. Once we reject the lowest point, we're going to 400. Once we use 416.22 as support, we're going to 420, okay? Trading has been very, very difficult lately because this is the range we've been in. This is the range we're in, okay? It's such a micro range. We're in a $9 range. So now you guys know. Everyone who's listening to this is you're lucky right now because I'm not even gonna post this shit. If you're here, you're here, and now you guys know exactly what I'm looking at, okay? We are in a $9 range. These are where I'm sniping put. I'm clicking buy at a put or a call. So you lucky 57 people that are on right now are going to know you're not going to have to wait for me to call something out. You know what? Every single one of these lines, I'm clicking call or a put. If we're going up to it, I'm clicking a put. If we're going down to it, I'm clicking a call. Okay? I'm going to be adding 25% of my position. Okay, realistically, I'm going to add like 50. But you guys, new people, should be starting positions with 25%, okay? 25%. Every single one of these lines. I'm going to give you guys a minute. Please put them all on your chart. Okay? I'll give you guys like 2 minutes so I don't distract you talking. Please, whoever's listening to this, all 56 of you, go put these lines on your charts and then I'll begin from there. Hey Willis, I don't trade ES. Okay, you're just joking. Okay. I don't even look at ES. I don't use the VIX. I use the VIX for macro plays. I I don't use anything other than SPY. Okay? I'm not like, I'm telling you guys, you don't need to overcomplicate your learning and your education by looking at 4 screens at once, 4 different charts. Obviously, the better, but I'm going to give you, like, if you were to do a quad split, I'll tell you which ones to look at. Yeah, see, that's how you learned, Willis. You probably learned from like other people, or maybe self-taught, watching other ones. I only look at SPY. Okay, I own SPY and SPX. I look at those two, but not really I only use SPX when we are going towards a key level, like 4100 and 41.5 and 42000. 42000. Yeah, you know I'm tired. 4200. I cannot even believe I just said that. That's hilarious. Yeah, guys. So that's what I use. So I hope everyone here put those down. I'm not saying these are these numbers are all gonna make you money. Okay, I believe out of 9 of them, at least 5 to 6 will. Okay, so you need to be very careful of how you're playing these. You need to add to these positions slowly, okay? And you need to cut losers fast. Because if 412.31 doesn't print, best believe 413 is going to print. Like say we're going for a put, going up, okay? We open below, like in the 411s. At 412.31, puts are going to print. If they don't, it's going to be 413. And if they don't, it's 1,000% going to be 413.49. One of them are going to print, okay? So like every 3, the next one's going to hit. So when you size in, that's why it's so good to size into a position and not go too heavy and not to be too greedy, because we're hitting all of them. So if you're entering, hypothetically, you wanted to enter 10 contracts. If you do 10 here and you cut out for 10 and you go here and you only make 10 cents, you're even, right? So the first trade of the day, it's always good to be able to size in. So start off with like 5 contracts or whatever it is, like position, like 25%, and then add 50%, and then see how it moves. Because sometimes you only need 50% of your full position in. Half the time I don't even end up, I'm not even able to get my 100 contracts in. Right? I usually size into 100 to 200 contracts. Sometimes I can't even get in past 50. Sometimes I only get in with 25, right? It just happens. It doesn't mean if my position size is 25 and the play's going my way, I don't add 75 contracts into the play. No, I bought where I'm supposed to buy and I'm letting that play make me money. I'm not adding. If you buy in and you top tick or bottom tick like we usually do, whatever position you're stuck holding, or you click in, and it's like, say you buy on this green bar, like right here. Say like it's going around and you're like, fuck it, I'm going to buy 25% of your position. Boom. You're stuck with that 25 now. We're not adding. We are not adding to this. Okay? So that 25% is going to pay you more than having your full position size in. If you're holding. Because this was a big bar straight to the 21. We usually buy in. Like, say we're buying on this green bar, we don't sell, we're like, fuck, and it comes back down and we're red. This one bright bar will make you like 150%, just because it was a time of day. But I'm just trying to give you guys an example. So if your position size is 10 and you're only able to get 4 contracts in, a starter position, whatever your starter position is, if you end up top ticking or bottom ticking that, you let that ride out. Okay, you do not add into that. We only add when a play goes against us. I do the complete, me and Will are on the complete different page, because Will add into a position. I only add when I know I'm getting a better price than my original entry. So if I'm buying at this bar here, right, I click it. I'd say I top ticked it. It went red here. If it comes right back up, I'm going to add 50% of my position in. Okay? And at this line right here, if we go any higher, I'm selling, because it's just going to keep going up. So we wait for the 5-minute candles to end. But this is right here is where I would add. I top tick. It came down. It was a wick. The next candle was a wick. This candle came up. You're probably not going to top tick it, but it's going to end in another wick. So you're going to have 3 wicks at the high. I would have probably entered here, so lower. The contract would have been higher than I originally bought in, okay? And then my stop would have been as soon as it goes a little bit higher. And sometimes you may get stopped out, okay? And it ends up tanking. It's going to happen. But the more, if you're only going in with, say you're going in, your entry is 10 contracts. If you have 4 in and your stop loss is 15 cents, right? That's $150. Your stop loss. If you're buying 10 contracts, you say, I'm willing to lose $150 on this trade. The time it goes up here, if you only have 4 contracts in, you can let that go 20 cents away from you and you're still at 80 cents, right? So you can still hold it. And then you could double down and hope we go down. And if it continues looking bullish, you cut it right away. Okay? This is why it doesn't hit our spot here and we buy, because this shit can happen. Okay? This is why if we're buying on this green candle, 25%, 50%, and even here you can add 50%. And then say if it goes any higher, I'm out. If it breaks this high, I'm gone. And you won't even lose your 150. You wouldn't even lose $150. Because you would add on this candle, this 5-minute candle, you would double down here, and then you would have your full position on this candle, right? And the next candle would open lower, which would give you confidence that this play is going to go down, okay? That candle ends, and now you're able to hold. That's why I tell you guys to size into positions, because if you're buying 10 contracts and you're gonna have a stop loss at 15 cents, that's $150, right? So if you're adding, say you take your position here, you just add 4 contracts, okay? You're still good. You probably only lost like 3 cents on your contract going this high. So you're still good. So that's what I'm saying. Sometimes 25% of your position can pay way more because you can hold it longer because you don't have a full position. And the time we reach down here, you would have made as much money with a full position on this candle, right? And your 25% made it on this candle. So it comes down to sizing. If you're losing more than you're winning, you're sizing in wrong. You're getting too greedy. If you're playing with 2 contracts and you buy 2 contracts on this bar right here as a put, of course it's going to suck when we're all the way up here because you don't know if we're going to come crashing down if we topped or if we're going to keep running. You have a shitty entry, okay? So you add 1 on this candle, and when it goes high, you can add another one. And then if that makes a new high, you sell it. So it's like this one. We come close. This is a previous 412 was a key support. We hit it as resistance. We opened right on it. You could have added a short position right here. It came up. It hit another key level at 412.31. You add to your position here, and you say if it goes any higher, I'm gone. Like if it breaks this candle from pre-market, I'm automatically selling. And right now you're 50% in, and look where the peak was. It tanked, came back up, tanked, came back up to our key level, fell off a cliff. Okay? So when I say my position size is 100, like I personally, it works for me, 100 contracts. I would say 60% of the time I don't even get to add 100. I don't even get to add 100 in. Most of the time I'm stuck with 50 to 75, and a lot of the times, believe it or not, like more recently at least, because the charts have been really very choppy, I'm stuck only getting in like 25 contracts, 25 to 50, because I bottom tick and top tick a ton. Okay, I'll add in here. We'll break our key level. I'll add in here. It drops lower. I add in here, and I'm selling here for a nice profit with only 50% of my position. That's how I roll, okay? So I size in, and I know when to add. I'm letting the 5-minute wicks end before buying, because at one point, this wick right here, guys, if you're watching my screen, probably looked bullish as freaking hell, okay? It probably looked like it was about to run to 413. This candle was nice and thick, and I last minute, I guarantee, just started sold off. Right? They fake people out on the 5-minute candles. The 1-minute charts, don't even ask me. I fucking hate the 1 minute. It's not worth it. They move way too quickly and they're very inaccurate. I use the 1 minute only for the shape of the chart. It just gives me a better what's it called? Understanding of the chart shape. Okay, is it bullish? Is it bearish? Are we neutral? I like the 5 minute for that because I can get very, very, very micro a chart setup just looking at the 1 minute. That's what I prefer. So it all comes down to so if you wanted to take notes, if you were taking notes, my first note would be to let the 5 minute candle finish before entering the trade. Because you can get faked out. Something that looks like a rejection, like this candle, for instance, right here, when it first started, it could have topped out here and came all the way back down here to look like a doji, right? And you're like, fuck, I'm buying, clicking, because you see a wick, and then it's starting to look like a doji. And then by the end of the candle, it shoots up high, okay? I've been faked out a bunch by that, so my personal rule is let the 5 minute chart, the 5 minute candle finish before buying in. If you're watching the 5 minute chart and you're at a key level, I would let the 5 minute candle finish. Okay, adding. Like I always start my entry at my key level, and I'm most of the time wrong. When you're adding your second part of your position, you do not add until that candle is done, because you're going to get faked out. It's either going to look, if you're looking for puts, it's going to look super bearish, and you're going to want to add like a doji, and then last minute it freaking ends like it's popping. It's about to run, okay? So when you're adding into a position, adding your second part to a position, I would let the 5 minute candle finish first, okay? That's what I would do. Let me just read some of this chat quick. Okay, I'm just going to go back and read some of these. Okay, so AMC, how to read the 30-minute chart to predict the next 30-minute candle. Okay, to be most transparent and completely blunt and honest with you, okay, AMC, there's a YouTube professor, okay? Let me just get you his name. I don't have time, to be honest, to be able to teach candlestick patterns to traders, because I only know what I'm looking for with SPY. Okay? And I know I've been doing this a while, guys. I know candles like a motherfucker. I don't have time to explain because it takes quite a bit. It's going to take you with your notepad, right? Watching Ray or what the frick's his name again? I keep freaking forgetting. This guy taught me everything. Give me 1 second. I'll get it for you. When it comes to trading stocks, guys, he won't trade you. He won't show you. This is his name. Go YouTube him. Is Rainer Teo. He will teach you fundamentals of how to be a trader, candlestick patterns, trends. This guy's information is free on YouTube. I highly recommend, if you are struggling with candlestick patterns, trend direction, he's very good, and his videos are quite long, right? A lot of the goats that I know and that got me into trading, this guy's helped us all, okay? So he is professional at what he does. If you click his name and then click home, the first one's the Ultimate Candlestick Pattern Trading Course, okay? It's 38 minutes. He has an ultimate stock trading course for beginners. It's an hour and 37. They're very, very long. And this is something you do on your weekend morning, your Friday or your Saturday, Sunday, or after the kids are in bed, or whenever you have time and you're fully alert and you're pumped about trading and you want to learn. This is when you get your notes, a notepad and a pen, and you lock in to his videos. You click one video, try to watch one a week. He's not going to show you how to trade SPY. He's not going to show you how to snipe. He's not going to show you any of that. He's going to show you the basic fundamentals of trading. And the most valuable ones you can have, especially with the program that I teach, is the candlestick patterns. You're going to be able to identify bearish, bullish candlesticks. And like, I'll tell you as we go, like, dude, guys, this is bearish as hell. This is bullish as hell. Will's going to tell you guys, next 30-minute candles bullish as hell. You don't need for us to tell you that. If you invest time, this is free, guys. You don't even have to pay for this. Like, he literally does this for free. If you invest your time, you're not going to need us to tell you if something's bullish or bearish for the next 30 minutes, the next day, who's swing trading, right? Who's doing calls tonight? Who's doing puts? If you invested your own time into learning candlestick patterns and trends, you won't need confirmation. You'll be like, guys, it's bearish. I'm putting calls in. Okay? You're not going to need any of us to tell you guys to swing or not to swing, right? And it's going to save you guys a lot of money because some people are so stupid and they'll get puts on the most bullish freaking daily candlestick, and they only buy puts because they're like, it ran up so much today, there's no way it's going to keep running. False. Bullish candlesticks are followed with bullish candlesticks. Bearish candlesticks are followed by bearish candlesticks. Okay? So if we run up $5 in one day, the last thing you do is swing puts. You may get lucky and get like $1.50 put. Some cases you could be right, but most cases, bullish candles are followed by a bullish candle, and a bearish candle is followed by a bearish candle. That works on the 1 minute, the 5 minute, the 30 minute, the 4 hour, and the daily. Okay, so you can use your own technical analysis without you don't have to ask me anything when it comes towards swing trading, because if you guys learn your stuff, you know just as much as me, right? I understand candles. I understand momentum. I don't use these stupid clouds. I don't use these stupid freaking bubble popper gushers. I don't use that stuff. I just use basic knowledge that has been taught since the beginning of the stock market, which is candlestick patterns. Okay? And for what me and Will do when we're watching the 30-minute candle, I know someone asked about the 30-minute candle. 30-minute candles. I'll let you in on our secret, okay? You're going to pull up the 30-minute candles, the candle chart. Okay? You're going to look at the chart. You're going to be like, when's the last time, like, say we're, let me just show you something. This is what Will would do. Will would look at the chart for a bearish candle at a support. The next bar would be in green, and the next bar means we're running. So he's going to look back on all the charts. He's going to see when a candle looks like this candle and is followed by this candle. A big bearish candle, and the next candle at the bottom of the chart is a green, and it ends with a wick. And he's in a bet. You know when Will like goes crazy, like, guys, it's bullish, bet you, like, trust me, buy. And you look at it, and we're down here, we're like, dude, we're under support, it's the stupidest thing. But he puts patterns together, okay? He's seen this pattern work where this candle shoots up. He'll go back and look at the last 2 weeks, and he's going to find a candlestick pattern like that tanks. Like these two candles right here, guys. We are going to see these two candles play out, this double top scenario. They're both wicks at the top, wicks at the bottom, the rectangular body. We're going to see this, and the next candle's in a tank. It's going to happen. I'll bet you $1 million that you're going to see this candlestick pattern. You're going to be like, yo, Top G, thank you for telling about that on Sunday, because the exact same two candles happened and I made bank, right? So whenever you're struggling and not knowing the direction, look at the last hour. the two 30-minute bars, a big green, a small red, and then the trend continuation of green. Just find the candles and follow it. They don't always have to be the same shape, okay? There most of the times are. Like, you can look at like this this pin candle here, right here, right? That's the most bullish candle. That's a very extremely bullish candle on the end of the day. Or not the end of the day. The bottom of a day. Okay? If the next candle opens green, this is definitely the bottom. Okay? Just seeing that wick. It's just identifying what bullish and bearish candles are. Okay? So, say we had a massive sell-off like we did here on April 12th. And then we kept tanking. And then this candle ended green. The next candle dips below. You're going to be like, well, this candle's bullish, so I'm going to buy calls as soon as it goes under this candle. And guess what? You banked. Okay? So find trends, find patterns of the candles on the 30-minute time frame. Go back 2 weeks, right? While we're playing, look at what the last time this candle happened. Okay? Look at the last time this red candle happened. You'll often get your result. And that's Will's strategy. That's why when you're like, Will, why are you buying calls? Will, why the hell are you buying puts? Will knows the strategy. It's what Will does. He finds patterns on the 30-minute time frames, and he knows history repeats itself, so he's playing history. And Will made $60,000 last week. So it clearly fucking works, okay? I'm a different trader, but I do like looking at the 30-minute chart. I don't like holding. You guys know me. But some candles, like this candlestick, dude's bearish as freaking hell. This is so bearish, guys. Watch Ray Orteo. Just get an understanding. If you're not good with candlesticks, watch it. If you're good with candlesticks, it's fine. If you want to get like what I used to do, you can change your what is it called? Sorry, I forgot how to do this. Line style bar. Yeah, you can change your what's it called? Your candlestick patterns to the Heikin-Ashi or whatever it's called, right? I used to trade this. Look at it. You see the trend, how the trends change? They go red and they just stay red. They go green, candle of indecision, and it just continues in the right direction. A lot of like the pro traders use this type. Bitcoin's still pumping, Willis. Keep an eye on that, eh? Don't hold. Bitcoin's up. Bitcoin's not doing bad. It's held its ground over the weekend. And this is what I told you guys. I've been telling you guys from 4:15. Bitcoin is losing liquidity. Bitcoin is losing liquidity. That's the first indication of money leaving the stock market. Okay? Because whoever has enough money to be in Bitcoin, they're going to be reading Bitcoin's chart. They're going to see all money is getting taken out of Bitcoin. So what are they going to do? They're going to be selling Bitcoin, and they're going to be selling their stocks ready for a dip. Sorry. Yeah, my phone was beside it. I didn't know that affected like that. Sorry. Bitcoin, they're going to be selling their stocks when they see Bitcoin starting, money begin taken out of the market. Do I think Bitcoin's done? No, I honestly think SPY and Bitcoin are going to go on a little pump back up to highs. Hopefully, 415, 416. That's what I'm thinking. I don't think they're going to give, like, the market makers are going to give us it this easy. Hit 415 and tank. I don't believe that. It should. SPY's bearish. SPY's not bearish. That's false. Bitcoin's bearish. We're holding right now. SPY's a doji. The weekly candle's a doji. Okay? So we do not know what's going to happen. All I know is go back to my key levels. If we're headed down, best believe I'm getting calls at 409.68, 408.63, 407.69, then puts at 408. That's my strategy. My strategy, I'm already I already know how I'm playing this level, guys. Okay? These key levels that G Estrada wrote down for us, these are my key levels. So my plays are already predetermined. I don't even have to look at the chart tomorrow. All I need is a notification. Ding, what went off? 409.68. Okay, calls. Ding, 408.63 went off. Okay, calls. I don't even have to look at the chart. Okay? I'm playing my key levels. My key levels always make me money. Consistently, week after week, make me money. Okay? They won't work 100% of the time. 60 to 75% of the time they'll work. Some weeks, 100% of the time they work. I've never went where it's 50-50. Ever. Right? Because I'm a sniper anyway, so I'm not holding for a whole trend. Right? But a lot of these numbers here, you guys are going to see that they are bottom and top ticks. Every single one of these is going to be a bottom or top tick. And let me show you else what is a top tick and a bottom tick. Okay, so 410. 410.74 when I said on Friday for calls. Okay? This was our line. You see how far it came down? To 410.45? Guys, it's still a call. It did not retest our key level. So when I say buy calls, I'm buying calls of 410.74. This whole area is included of buying 10s. Or buying 410.74. So if you buy here and get stopped out here, your stop loss is too short and you went too heavy, or you did a shitty contract. But this, do you see how this key level did not act as a resistance on the 5-minute time frame? So if you, as soon as it broke through 410.74 and you just bought a call anywhere here, the next candle you're in the money. The next candle you made money, like a ton of money. Like you're good. Buying as soon as our key level broke. And where would you have sold? If you bought as soon as it broke under, you would be watching 410.74 to see if that candle reacted as a support or resistance. That's it. You don't have a full position size in. So if we go towards the lows, you can just cut it. And be like, I didn't like the way it was looking. If it makes a new low, you can cut it too. Okay? So remember, key levels are just a line. Our key level is a line. It is like, I buy at the line knowing I'm adding below the line or above the line, okay? I'm adding below the line and above the line. I'm adding. This is a key level. For instance, 410.74. You buy at 410.74 and like, remember at one point this bar was a thick red and it looked bearish as hell. And a lot of people that are neutral on the day yesterday, they didn't buy calls with us because they're like, no, that looks so bad. I ain't buying calls. Fuck, top G's on crack. Look at that. End up being the best play of the day. Why? Because we bought our key level and we held it down. Because that's what you're supposed to do. We buy our key levels. And guess what? We do puts at our key levels. That put didn't work. Cool. You get stopped out. Boom. You buy at 412 and you get stopped out here. You better have a put on your screen for when it hits 412.31. Because look at the downside. Just because you get stopped out, you should have your next line on the screen of where you're buying, guys. Right? Right away. Immediately. You get stopped out here. Okay, guys, I'm playing 412.31. And a lot of you guys will get stopped out here and be like, fuck, man. Oh, I lost so much money. Oh, that was such a stupid trade. Why did I even do that? Screw this, screw that. And then, boom, I'm already in, guys, and I've already milked it. Okay? We're in already. While you guys are complaining about getting stopped out here, we're already back in after getting stopped out. Already back in making money. Okay? Have your key levels ready to go at all times. If you get stopped out at one key level, you're buying the next key level. Okay? Stopped out here, but we're still buying here. It's the same trade. We keep playing the key levels because our key levels will never not work. If we blow through one, like right here, look at this. 412. Do you see how we crashed through 412, 411.79, 410.74? Guess what we ended up doing? Retesting the level we broke and did not retest at 412. This is why I play. This is why I tend to bottom tick things. Because I'm buying in. I'm like, dude, we just broke through 3 levels. Like, fuck, they're going to keep crashing this. These are massive key levels. Massive key level. Look what happened. As soon as that discussing sell-off, people were like, oh, puts, swinging puts. You know how many people were entering puts down here? And look it. We broke through key levels. It looked like bloody hell. Look what happened a couple hours later. It came right back up. Not only did we come back up, we made a new fucking high on the day. Okay? And you never know which key level is going to print, but one of them are going to be the trend reversal. Best believe that. I'm telling you, we play all of our key levels, these lines right here. Okay? And I want royalties on every single line here. So whatever you make, I want 20%. Okay? 20% from all of you. Just joking, guys. But you can buy me a Breitling if you want to. If this strategy ends up helping you, making you money. Okay, I'm gonna go through these questions now. Sorry about that. Let's go back up. Okay, next one. On Gaku, same thing. Ray or Teo, I typed it in the chat, guys. Watch his, write it down, write his username down. I think he's from Thailand or Vietnamese, or Vietnam, sorry. I don't know where he's from, but his technical analysis is spot on. He doesn't do what we do, but he will show you how to be able to hold longer and confirmations. He's very good at that. Next one, Charlie. How do you correlate? Charlie, I do not use ES. SPY and SPX, guys, for anyone new here, are the exact same chart. They're just 10 times the price. Okay? It's the same thing. If you can trade off, I can trade off SPX. I can trade SPY off SPX and trade SPX watching SPY's chart. Okay? ES, I don't use it. I don't need it. SPY tells me everything I need to know. That's just what I prefer, guys. So I can't help you there, Charlie. I apologize about that. All I know is that they're all the same thing. So all you need is SPY. That's it. And if you want, you can have a split chart with SPX, SPY, the VIX, and throw Apple in there. And Tesla. Right? Those are the ones I would do a split screen with. SPX, just for the key level of like 4110, because it's kind of, a lot of people don't know how to, if SPY's at 405, say SPY's trading at 405, and people are like watching 4100 on SPX, because Weeble's delayed. So, if you wanted to, I recommend my perfect chart. What I like having SPX. I watch that on somewhere else, so don't worry about that. But I love having the VIX. The VIX is the inverse of fucking SPY. It's literally the exact opposite. You flip SPY around. That's exactly what the VIX looks like to the T. Just invert your chart, and it looks like that. I still like watching live version of VIX. I like Apple in the mix. Apple's flow and Tesla's flow. Nothing really else moves the market that much. And Bitcoin. I love Bitcoin. Because Bitcoin and SPY have a big correlation. Don't believe me? Look at the charts. Look when Bitcoin bottomed. Look when SPY bottomed. Okay? Especially when it doesn't always work, but right now people are investing money, okay, in the stock market and in crypto. So Bitcoin is the favorite. Bitcoin is the safest from what people think. I don't agree with that, but that's what people think. So when you see money start getting invested in Bitcoin and we're holding, there's probably a little bit of a run coming up. And the same with the SPY. For SPY, we've been running, so I don't have too much hope. But yeah. Cray Seeker, how can I stop paper handing every trade when you know where it's going? The easiest way to do that, buddy, is you have to do safe contracts. You have to. You're not doing enough contracts, and it's not worth the risk doing a 2-day contract and leaving your computer for the day, being like, oh, it's gonna hit here. You want something that you can buy. I don't know, like, guys, I play even with a $20,000 account. I'm still buying October puts, and I'm still making, like, when I swing trade, I'm still making like $1,000 overnight on like a $1 70 move. Okay? So don't think you need to do risky contracts. And they move nice too. I'm telling you, October contracts, guys, are the shit. They're moving. They're moving. I'm only buying like 10 with my $20,000 account. And dude, you can make a good money off that. And it's way less risk because if you wake up the next day and it goes $2 against you, you don't even care. You'd be like, okay, I'm going to go leave the computer for the day. It's not at my key level. This is a fake pump. I do not care. Or I'm going to add once it reaches this level. Okay? October, you're talking about October puts, guys. In the money puts. Like 410, 415. Those things, dude, I'm telling you, they print nice as soon as they go in the money. And it's something you can hold in case of a bloodbath one day where it's a $10 move. You're top picking. You just watch the chart. You know what I'm talking about on these bloodbath days like this. And there's not even an uptick. They just sell off. So there's zero reason to sell all day. One sec, guys. I got to go grab a drink. Hold on. Sorry about that, guys. My throat was getting so dry. I went from talking all week to like not even saying a word. My wife's like, why are you so quiet? I'm like, I do not want to fucking talk. I'm sick of talking. But okay, I don't even know where I was. Oh yeah, holding. Yeah, safer contracts, guys. Best believe me. I'm telling you now, I'm giving you the sauce. October puts are the shit, especially if you work. If you have a day job and work, you have a few grand, buy a couple of them in the money, and you won't even be tripping while you're at work because they're October puts, and they're eventually gonna print. Okay. Let me go next. Let me just read this one sec. Scrooge. He's saying when entering a position, when 25, 50, 100, what patterns are confirmation, when to cut, just a 10-cent a 10-cent loss or price target. Okay, so this is when candlesticks in confirmation come. Don't be too quick to cut because you have to let the 5-minute candle close. But when you're buying my key levels that I just gave you, there is going to be a move. Okay? And if it's not this one that we rejected from, it's the next one is going to be the big one. This one we bought skyrocketed. We still bought again as soon as it broke underneath it because it did the same thing twice. And it rocketed up. It's good to know I only trade SPY, so I have that like feeling. Like I've been trading SPY for 5 years. So like I've been only trading SPY for the last 2 years straight. Like nothing other than like earnings. Okay? Earnings here and there. But I trade SPY, so I understand how SPY moves. When it comes to confirmation, there's really like not much confirmation else you can get other than you can look at the 1 minute chart, okay? And you can see when you buy a put how we're acting. Doji, Gravestone Doji right here. You see how we're acting. Weak, wicks, and it just gives you confirmation to hold. Wicks give you confirmation to hold in the direction against the direction. So if you're doing a put and you're seeing a wick and the next candle's a wick, as long as it's not you're in a safe contract and it's not doing much, you're able to hold that. And you can, if it goes a little above you, like say you buy here, this red candle right here, and it ends up over here, you could add your final position. Be like, if it goes any higher, I'm out. I'm going to cut it. But I'm usually here trading with you guys, so I can explain it like when we see something live. But it all comes down to the contracts you guys buy and your position sizing. The position sizing lets you hold. I can't hold fuck all in my $20,000 account. I hate that. I forgot. I'm act like I'm. I feel like I'm the worst trader in the world with that account because I'll make $600, $700, $8,000, $9,000, $2,000, and if I overtrade, if I trade that account like my account, I'll lose it all in one trade because I'm used to buying 50 to 100 contracts in risky stuff, right? So, and to trade smaller accounts like that, it comes into the right contracts and position sizing. You always need money to add into a position 3 times. Okay? At least 3 times. Because you're gonna buy in at the line, it's gonna go against you, and then this could go against you too. You can add your 3rd time and say if it goes higher, I'm out. But there's big reactions. Like say we're buying a call on like race. So you see how we broke through all our EMA lines and we didn't retest? Say you're buying a call right here. Okay? We bought before our line. Just say hypothetically. We buy in 25, it hits our key level, 25, and then it goes against us. You can always double down 50% if you're confident in the trade and have good contracts. Okay? The key is to have safe contracts. I was buying calls here and I was able to hold because I just know we have to come back up. Why? Because, dude, we broke through way too many fucking key levels and EMA lines. We didn't even retest them. I know that's how SPY works. That's my shit. This is what I do for a living. I know this happens. That's why I'm always bottom ticking and top ticking. I'm just always wrong when it comes to my exit. Like, I know it's going to come back up here, but if I'm buying down here, guys, I'm still selling on this bar. I don't care. I know it's coming back up to here, but I'm still selling here because I just take my profit, man. I see green and dip. I see green and I get out. And it all comes to your how much you guys are willing to make and lose on a trade, right? If you go by my 15-cent strategy, there it is right there. You stick to the 15-cent strategy. But if that 15 cents, if you're buying 10 contracts and say it's 15 cents, that's $150. So if you're starting a position with 5 contracts, you can let it technically go 30 cents away from you before having to stop out. You get what I'm saying? So you don't need to do a full position because you're going to get stopped out right away. You do 5 contracts, you can hold it for 30 cents down. Or you could buy 1 contract or 10 contracts and only hold for 15 cents, right? That's why I always do starters. And then if it's like 20 cents away from you with half your position size and it's starting to look weak, you see wicks and it's looking very, very weak, you add in there and be like, if it goes a cent higher, I'm out. And if it goes a cent higher or a cent lower, you're gone. That's how I gauge it, like that. Okay? That's why starter positions are the best, because I'm going in with 1,000 contracts. I'm going in with 100 contracts. I'm risking $150, or I'm risking $1,500 on this trade. Okay? So obviously I'm not going to put 100 contracts in at one level, because I can lose that $1,500 in seconds if I'm wrong. Okay? I'll add like 25 or 50, and then I'll add 25 or 50, and then I'll see how the trade works. Chris, I don't look at level 2 trading options. I keep to the basics, buddy. I'm in and out, and I just play my strategy, and my strategy just shows you guys. I don't need little bubbles on my screen, little gushers, all these clouds. I don't need that shit. Me personally, I don't. Well, could it help you? Potentially. I'm not against it. I just don't know anything about them, and I don't necessarily need them. If I find a time to find out, and I learn, like I'm meeting up with Dimitri on Friday. If he shows me how this stuff works and it could perfect my game, obviously I'm going to use it. But right now, you don't need it. You don't need no fancy indicators. You need nothing. You want to be very, 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 very basic, put a line at previous close and use the 200 EMA. And I guarantee you'll make money 4 days a week. Guaranteed money. Just with a 200 EMA. Take off every freaking line on your screen and play the 200 EMA on the 5 minute. Coming up to it, put. Coming down to it, call. Guarantee you will make money 4 days a week. I guarantee you that, sizing in. I'm just reading through these, guys. Give me a second. Just trying to get rich. It's just a line, okay? You're always gonna overshoot horizontal lines on my chart. It's very rarely where you just tick like this red candle, right? It's very rarely you buy and it just works. So it's just a line. Just a line. You see how down here this line's still 410.74 is still in play, and we came all the way down to 410.45. Where it's still in play, guys. We did not even reject it. This is why I watched the 5 minute time frame, not the 1 minute. You go to the 1 minute, 1 minute probably rejected it. It's way too freaking micro. It did. Look at the 1 minute rejected it twice. That's why we don't use that shit. It's way too micro, guys. The 5 minute tells a story. The 30 minute tells the bigger story, okay? This art support here is in play. Look it. We touched it pre-market, bounce. Touched it pre-market, bounce. Touched it in the day, bounce. Touched it another time in the day, bounce. You're never gonna get the best entry and exit. Both of them. You're never like, it's a fluke to be able to buy the top and sell the bottom. Sell the bottom, buy the top. It's hard, man. That's why you need to size in. Okay? You gotta play your play more micro for the day chart, like the 5 minute chart. Play the 5 minute chart more micro. Like, we blew through 3 supports and all these EMAs, 200 EMA, everything. Of course we're coming back up to it. What did we do? We fucking came back up and touched it. Everything we broke through, we retested, right? It's about having safe contracts and buying where you're supposed to buy. This candle was debatable, but this was a bullish candle. So you can hold and be like, if it goes any lower, I'm out. If it breaks this bottom, I'm gone. Okay? Let's look at some more. Willis, I never try the 2 or 3 minute. I do not care. I scalp on the 5 minute and it works fine for me personally. I'm not saying don't use them. I'm just saying for me personally, I haven't tried them and I just prefer the 5 minute. Personally, that's what I enjoy. Yeah, gee, bubble popper gushers. Oh. Lee Pie, is it better to close a position at stop loss or hold and add to higher? It all depends on your position. It all depends on your account size. Sorry, the guys with the bigger accounts, we can get ourselves almost out of every situation if we're not using same days. If we're using safe contracts, we could find a way to break even or make the loss as small as possible. Right? Sometimes you can get burned, but a lot of the times, when the more money you have, the bigger your account is, you can almost get away untouched if you're playing key levels only and at like doubling your position size at the next key level. You won't make money, but you can make a big loss small to zero. Okay? So it all depends on that. What I prefer to do, I don't use a stop loss. I do it manually. I just like look the shape I don't even watch my contract price. If I know something's going to get me against me, I just cut it very quick. Sonny, some people are starting out and have less than 3K. October strikes take up a huge amount of money. Um, I don't know what to tell you. I'm not a magician, right? I'm just being honest. Those like if I personally if I had $3,000, I would be buying one October contract and letting that shit fucking ride. And I will double down on that contract if it went to 416 to 420 because I know SPY's gonna crash. Right? It's just honest. If you don't want to do October strikes, I get it. You can always do it like at least 5 days out. Something you can buy 2 or 3 contracts with. Okay, you don't have to do October, but if I was personally doing October, I would be buying. If I only had $3,000, I tell Centex this all the time. Like if I had smaller money, I would be buying in October a half a position size and adding and not even worrying about that. Like if I only had that little of money. Obviously the more money you have, if you have like $20,000, you can't hold those contracts forever. But the smaller money you have, that's personally what I would be doing because I'm a bear. I think we're due for 390s to 380s to 370s within the next couple months. So I would be playing it personally like that. Obviously not holding. Once you see support on the next key level, you cut your puts regardless of how safe they are. Okay? You don't just buy and hold, but if I'm putting something at like a key level, that's what I would personally be doing. And if you don't want to hold and that $3,000 needs to make you money every day, then obviously you have to be doing something that you could buy 2 or 3 contracts with. But anything under $3,000, you have to be doing riskier contracts. It is what it is. Lepai, I know $20,000 is not a small account to you. I know $20,000 is not a small account to a lot of people. $20,000 is a ton of money. When you're trading with almost 7 figures, it's a different trading strategy. That's all I'm trying to say. Okay, it's like I can't trade the same way with my account as a $20,000 account. So it doesn't work for me. So when I say smaller, obviously it's smaller. It's like 20 times smaller. But it's just the type of trading strategy. Me buying 100 contracts with my account, I can lose 3-4 grand and make it back. When I start buying 100 contracts with 20 grand, every 10 cents is 1,000, right? So you can diminish that account very quickly. So it's a different trading style and trading strategy. And that's what I've come to realize. Like, I thought I was an invincible trader. I thought that, give me fucking 5 grand and I'll make you $1 million. Once you're used to trading with a certain size account, you become good at it. Once you go to a different size account, it's different, man. It's just like you guys trading right now. Imagine your account was 50 times higher. 50 times more the value of your account right now. 50x your current account, okay? Would you be trading the same? Fuck no. None of you would be trading the same. And I don't even want to hear you guys telling me you would be trading the same, because you wouldn't. What would you be doing? You would get the safest fucking contracts possible and putting in the least amount of money possible. It's a fact. The way you're trading right now, if you lost 3/4 of your account or you gain 10x of your account, your trading style is completely different, guys. That's why you have to learn to adapt, and you can't let losses scare you and screw up your mindset, right? It sucks taking a catastrophic loss, but if there's only one way out of it, and it's to get it back with the amount of money you have left over, guess what? Tough luck. You got to do it. You have to stay disciplined. You got to get the small wins back. BLK, no, Will doesn't. We all pretty much stopped that. I still do it, to be honest. I love it. That's my shit. I love it. But then again, remember, you need an account to trade those. You need a big account to trade those. Like I said, I can lose 3-4 grand on a bad play on same days and not be stressing and can get it back. If you're buying 100 contracts with a $25,000 account and you let it go 40 and like a massive red bar happens on a same day like down here and you lose 30, 40, 50 cents, you're all, like, you know what I mean? You're losing like 30% of your portfolio. So you need to have, if you're doing same days, you have to proportion it to your account size. Okay? You have a $20,000 account, I would be sniping with 10 contracts to 20 contracts. I would buy, like right now, my strategy for my $20,000 account, my first original entry is 10 contracts, and my second entry is another, I double it down and add 20. Okay? And I'm doing, I've been recently doing it the last 2 weeks. I've been probably making like 400 to 700 a day. But then one day, Thursday, I lost like a week's worth of profits in one candle. Right? I literally was doing so good all week, making great money, and then I did 80 contracts on the same day, and I lost everything I made. So you have to be able to stomach those. That's all it is. When it comes to same days, if you want to play hard, you're gonna lose hard. You're gonna win big, and you're gonna lose big. So that's what you guys got to realize. You're not invincible, okay? You're not gonna always win. And you could, like I said, you could be right 99% of the time. That one time you're wrong, you can go back. I lost everything I made last week. I made more than a fucking doctor last week who went to school for 15 years. Lost it all in friggin' 4 seconds. Like, you know, like you have to be very, very careful, guys. You have to be. And you want to preserve your capital. If you have a bomb week and you, like everyone, a lot of people here had a big week, you guys got to protect those gains, guys. You can't be out here wilding and doing stupid same days just because now you have more money to play with. Protect your capital. You have to. If you have a big week, guess what? Your next week, you're going to be only playing key levels and even safer contracts. Because you want to make sure by the end of the next week that you have previous week's profit with a little bit of profit from this week. You don't want to make 3 grand last week and this week you lose 3 or 2,500 or even 4 grand. You don't want to go backwards, guys. A lot of people are going backwards. You got to stop that shit, okay? Everyone here makes money. So stop letting your losers destroy you. Stop. You're on a treadmill, dude. You're winning, you're losing, you're winning, you're losing, you're winning, and you just keep going on the same pace. You're going nowhere. You're sprinting and you're moving nowhere. You're having a good week, a bad week, a good week, a bad week. You need to be able to have a good week and start playing downsize all of next week. So if you're buying 10 contracts and you made 4 grand last week, guess what? This week, go start sizing them with 5. And play only the key levels. Don't get into this gambling day trader that is going to happen to every single one in here on a bad day. You're going to be a gambler one day. Your wife, husband, brother, sister, friend, someone's going to piss you off. You're going to be in a wrong mindset. Something's going to happen. You're going to take a big L. You're going to continue day trading and trying to get your losses back playing 0 days till expiry, and you're going to blow up your account or lose way more than you expect, okay? It's going to happen to everyone here. As long as you have your self-discipline and you only play with money you're okay to lose with in that trade, you're going to be fine. Before you enter a trade, be like, I'm going to risk $500. I'm okay with losing 500, so I'm gonna take this trade. If I lose 500, I'm okay. I'm still up good money. I had a great month. This trade I'm entering, I'm okay to lose 500. Not, I'm gonna enter this trade. Looks good. Click, 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 and you're like, oh my god, I'm down 500. Are you kidding me? Okay, let me add a little more. Oh fuck, that $500 turned into an $850 loss. We don't do that. Stop being on a treadmill. And if you have a big week, you have to learn how to size down. That's how you compound your account, guys. It's okay if you're buying 10 contracts and you make 4 grand, 4 grand last week. Next week, you start sizing 1.5 and you stop trading. Once you lose two, you lose two. If you lose half your profit from the previous week, you stop trading for the week because you're not mentally good, and you need to take a time off and you need a reset. You need a reset. If you lose, that should be everyone here's rules. If you have a good week and you lose if you lose 50% of the previous week's profit, you stop trading for the rest of the week. So at least you're going in to the third week still up, but you're not really still up because you lost half, so you're going to be fucking pissed, as you should be pissed because you shouldn't be losing that much to begin with. All of us, our losses are way smaller percentage to our portfolios than amateur traders in here, guys. You don't see, like, when you're talking actual percentage-wise, me, Will, Dimitri, Jim C take the least amount of losses percentage-wise than everyone in this Discord. We lose a lot of money, but percentage to portfolio size, it's nothing. Like, we don't let stupid shit overcome us. We don't let, like, because we've all lost, right? We've all lost everything before and gained it back. So everyone on here is very, very smart when it comes to handling money, and you all need to be very good with handling money too. You have to. I don't care if you're doing the same day. Like, some people are like, oh, my stop losses are 20 to 30%, and then I'll stop out. That's the dumbest fucking thing I've heard in my life. Do you know how many people I see in this Discord say my stop loss is 15 to 30%? Like, bro, when the fuck have you seen me, Will, Jim Dimitri ever lose that much? We don't even lose 10% on trades. Why? Because we know when something is going against us. We take big L's, don't get it wrong. Like, my L's are big. And everyone else's, you see Will's, he'll say $2,500 loss, $500 loss, $5,000 loss. You'll see that. But when it comes to the actual percentage of the portfolio, it doesn't even hurt us. And there's a lot of people that are making trades and holding I'm talking about percentage-wise, way more than we will. We get in and out fast, guys. If something's going against us, we cut it. And I'm going to be more hard on you guys next week when I'm actually going to be throwing down cut it. Like, I'll say, guys, cut it. Like, if we enter trades going against us, I'm going to say cut it. That's it. And it's up to you guys. I let things play out, but if it comes to everyone, you just cut it. 80K loss. I've lost 80K like 80K times. I'm just joking. But, yeah, it happens. That's why everyone preaches, and everyone's not like me. Like, I will explain to you guys my reasoning behind me elaborating on certain things I'm telling you guys, especially when it comes to losses. I'm more sympathetic. When it comes to Will and Dimitri, they're very blunt, right? They'll tell you guys what it is to your face. They'll be like, you're an idiot. Why the hell are you holding that? You need better education. What the hell are you doing? But they only speak like that because they've been there and they know it. Like, they've learned the lesson. So they pretty much just tell you guys, like, dude, that's on you. Oh, you blew up your account today? Cool. None of us did. Oh, you held longer than you're supposed to? Whose fault is that? Right? And I'm on the same page as them, but I just try to explain it differently because a lot of people handle losing differently. So I I'm more sympathetic because I've been there, I've done that, I've had no one there, I've lost money I wasn't supposed to lose. We've all been there before, okay? And if you haven't been there before, dude, you guys are very, very extremely lucky if you haven't been there before. And if you have been there before, you're gonna get out of it. But there's only one way out, okay? You either quit day trading or you stick to the program. Those are your only ways to be successful. You don't like how much money you're losing? Be true to yourself, guys. If you're losing a lot of money and over again, you have two options. Quit and you'll stop losing money and get a job, or find where you're going wrong and actually fix it. Like, stop just telling yourself you're going to fix it. Stop telling everyone and bragging to your friends and family, like, I'm a day trader. Yeah, I'm a day trader. Make this much, make this much. Because everyone knows it's bullshit. Because there's a reason why you're in this Discord, in Will's Discord. There's a reason why you're in my Discord. It's because everyone needs help. So stop losing. Either quit or find the key purpose of you losing and fix it. And I don't mean to be blunt to people, but it's like the truth reality, because I hate watching people continue to lose and lose and lose and lose. It actually, like, it guys, it's hard because I've been there, but it sucks, man. When you just see continuously people like, I don't know what I'm doing, I'm losing money, I need help. Then just trading isn't for you, right? Just long-term investing is good for you. If you like stocks, go do long-term investing. Buy the dip when we're about to crash in the next 2 months. Buy the dip and go back to work and just watch your stocks go up eventually. When it comes to day trading, you have to be a different type of animal. When you do what we do, we are animals. Okay? You guys are animals. You know what it's like. It's either a good day or a bad day. Okay? It's either a water day, a water at nighttime, or a couple glasses of wine at nighttime with a couple beers. Okay? And it's not meant for everyone. It's very, very stressful, and only the strong survive. So if you want to survive and you want to stop having shitty days consistently, find yourself a program, make your own program, stick to your rules, and just play your rules. That's all you got to do. Take advantage of low volatility. Options are cheaper now. Trade one contract. Yeah, Lepi, you can do that for sure. You can easily do that. But if you're continuously losing every week, guys, and you're scared with the amount of money you have to stop yourself in your tracks and fix it. Fix the root problem. Put your lines on your screen. I'm buying here, I'm selling here. I'm buying here, I'm selling here. I'm stopping out here, I'm stopping out here. And that's all you got to do. Is every time it hits a key level, buy. You get stopped out, cool. I'm going to play the next key level. Buy, you're going to make money. Lose 1, win 2. Lose 1, win 5. Lose 3, win 10. Okay? It's all about, it's multiple days of this consistently. You have to be consistent. And you have to have a strategy. Make your own program. Make your own strategy of how you're going to approach trading and how you're going to do this. I'm giving you the tools. Now you guys got to build it. Let me just read this. Sonny, in 2000, I blew up a 100K account. I couldn't handle the loss. I stick to close steps now, or stops now. Yeah, exactly. Yes, Sonny, I've been there. I know exactly what you went through. And it's good that you're still sticking here. You're still around. That's awesome. And you still continue to do it. You believe in yourself, and you're not gonna ever allow that to happen again. And that was probably the best thing that's ever happened to you, because you're never gonna make that mistake again. Right? If you can't trade with a $2,000 account, you can't trade with a $200,000 account. If you're losing money off $1,000, you're gonna lose money off of 10,000. You lose money off of 10,000, you're gonna lose money off 100,000. Where everyone is right now in their life, the account size that you have right now, more money's not gonna help you. Because if you're making the same mistakes over and over again, you're gonna make the same mistakes with a bigger account and just make the losses bigger. So all you need to do is stick with the program, guys. Stick with me. I'll help you guys. But there's a lot of people that are losing money every day, and it's actually irritating because 90% of my Discord, of our Discord that we are all a part of, are green every day. And it's the people that venture off and do their own things that are red, right? And if you want to stop being red, stick with the pact. We're not going separate ways. We're not bitching and arguing. We're all together. We are all entering the exact same plays. I get some people are not entering. You got to start entering, though. I'm not going to come over there and press the button. I'm not going to be able to tell you, guys, this is going to be the best play ever. Get in. No, I'm going to play my key levels, and most of the time they end up being the biggest play of the day if you hold. Okay? So positions that don't look like they're gonna be that big of a move end up being the biggest move of the day. Right? Positions that don't look that big of a move end up being the biggest play of the day. So when I tell you guys I play all my key levels, I literally play all my key levels. Okay, and some of them are gonna lose, but the winners are gonna outweigh. It's just a part of it. I snipe. I get in and out, and I don't hold. So if you don't sell when I sell, if I say guys I sold, and it starts going back up, don't tell me, hey Top G, when should I sell? Because I probably won't even respond to you because we've already sold. Like, we don't hold. And if you are holding, you're buying at a key level and you're going to have a stop loss. As soon as the move goes in your direction, you're going to put a stop loss at your entry and be like, okay, this is a risk-free trade for me. That's another way to do it. Like, say you buy right here. You buy right here, the big move happens and your stop loss is at break even. And you're like, I think I bought the top, so I'm either going to make zero on this trade or have a big trade. And then that's how you capitalize. What do I think about May 26 puts? Is it too short for swinging? May 26. No, May 26 is good. That's good. But remember, once you see one of our key levels act as a support, right? You see our key level act as a support, we're going higher. So you just don't hold a put for no reason. Our key support, our key level act as support, okay? Our key levels acted as support, ran, acted as support, ran, acted as support, ran, acted as support, ran. So just because you're bearish or bullish, the next key level above, if it's acting as a support or a resistance and you're going in the opposite way, you cut it. So you can buy, I don't care whatever, you guys can buy whatever contracts you want. You can buy it 2 days away. I don't care but if you see the next support act as resistance, you have to cut it. That's why I get safer contracts, because if something rips above me, I have time to see if it's acting as support, right? You see down here, we're in this area, this candle support came back down, we held it. This is when you cut it. After it comes back down, you cut it. Because why would you be holding 411 puts when 412.31 is acting as support? And why would you holding 410 puts when 413 is acting as support? And why would you hold puts when 414 is acting as support? You get what I'm saying? So you guys, I don't care what contract. I'm okay with any contract, same days, whatever you guys want to do, it's whatever you want to do. But when it comes to swinging, you have to be buying at a good key level. Like 415, yeah. But right now, if you're buying like in at 411, 412, shitty entry. Horrible entry. Because we were just at the 13, 14s, and 15s a couple days ago. So we don't want to be swinging at the bottom of our channel. If we're doing that, if we're swinging and we're doing closer day expiry swing puts, we're buying at our key level. But it is a good contract, Dallas. Long story short, it's a good contract. It's just, you could buy whenever you want to buy. Okay? You can have some good swing puts. The area, if you see our next key level act as support, there's no sense of holding it, because guess what? It's going to the next one. Right? If 412.31 is acting as support, it's going to go to 413. So just buy it. You can rebuy at 413. And then you can rebuy at 413.49. And then you can rebuy at 414. Because you're eventually going to get the move. Okay? So the safer contracts let you get out with very minimal risk and very minimal loss. So it's easy to keep getting back and forth. But okay, guys, I'm going to wrap this up. Is there any more questions, last minute questions? Anyone want to hop in? Microsoft. Let me look. Dallas, if you want to write down my screen, I don't even know how I have these. I guess I've been trading it for a while. You can write down my key levels if you wanted to. If you see, I have an alert set at 280.05. So if you look at Microsoft's chart right now, Dallas, it's in a range. If you buy calls, you're gonna lose, and if you buy puts, you're gonna lose unless you sell them quick. You see my 30-minute chart right now? This tells me to why you should not even be touching a swing because you're literally in a channel. Look at the high. If you were swinging puts, you swing at 291 in the 290s. And if you're buying calls, you're buying at 281. You're buying in the 280s if you want to buy calls. You're buying calls in the 280s and you're buying puts in the 290s. It's literally a $10 range. We're at the bottom of the range, right? Literally in the middle of the range at 285. There's no trade here. Absolutely no trade. Don't get it wrong. We can wake up tomorrow. This thing could be tanked, right? But it's just like regular technical analysis. I wouldn't trade. I wouldn't swing this. That's for sure. No, I don't want 420, Tracy. I don't want SPY 420. If SPY goes to 420, it's going to 430. If SPY hits 420, it's gonna rip to 430. It's not gonna pull back. You don't do puts at 420. I've seen it happen before. When we ran to 418, it was bearish, and then we ran up to 420. Everyone loaded puts, and we ran up to 430. I'm not doing that again. So once we go to 420, if it's acting bearish up there, I'm only entering puts at I'll tell you right now. 416.72. If we break 420, if we reject 420 and it's acting bearish up there, I'm swinging puts on a rejection of 416.72 because to me it's not worth the risk. Risk to reward's not worth it. You see when we came down here, look at this move, guys. We went from 358 all the way to 430. 426.50. I think Weeble's off. I'm pretty sure we hit 430. But and look at the 420 area. Dude, people were loading puts on this bar right here, and it ended red. You see how they loaded puts, and what happens? It ran another $10, and history repeats itself. So I'm not playing puts on SPY at 420, personally, like swinging at least. But right now we are in an M shape, guys. We're in an M. It can go either way. We could be in inverse head and shoulders and fucking run to 440, or we're an M, right? We don't know what's gonna happen. Yeah, I agree, Sonny. Oh, 40, 20, 100. Yeah, my bad. Don't start off with 10 contracts, Sim. Start off with 5 contracts and let's see how it plays out. Start off with 5. Don't do 10. When you do 10, the trade happens too quick. You start losing fast money quick, right? Every 10 cents is $100. So I would start off with 5. Scrooge, they're in go to the key levels under my name. Under getting started. Go to getting started and my EMAs and MAs are right there. All my lines are right there, buddy. Okay, guys, I'm going to get going. This is past my bedtime. I got to get going, but I will see everyone at Market Open tomorrow. Thank you for being here tonight. I hope I helped you guys out. I know I tend to wander while I'm speaking sometimes, so I apologize about that. But let me know. Let me know if you guys need anything. I'm in my DMs. Hit me up. Email me. I do not care. And anything you're going through, remember, it's only temporary. Right? The goods are temporary and the bads are temporary. No matter what. So always stay positive and always keep moving forward. I'll talk to you guys tomorrow. Take care, guys.